Hi, good evening. Okay, today I'm going to share with you about this my thought process, right? That I use every week in the markets, and it has these four fundamentals, four things, okay, which is impulse wave, reply wave, liquidity grab, and time frame. Okay, because why I want to share with you I like to share my thought process first before I go to the actual charts, because if you look at most videos or how people share with you about what they feel about the pair and where what kind of trades they are into, but seldom they all share about their thought process. Okay, so I'm not gonna be those type of people, because my kind of style is that I'll share you my thought process, and then when I took the trades, it's got something to do with my thought process. Okay, so that's what I'm gonna do. So hopefully that this one just serves to you guys as a lesson. Okay, it can be a lesson, but it can also be something that you can apply in the markets. All right, so let's just get into the things. Okay, impulse wave and reply wave. Impulse wave and reply wave, right, in my view, right, is a very good way to see the markets, because the market works in a structure point. Okay, for those of you who does not really know what is a structure point, okay, market has always 4 points of character. Okay, like for instance, in this case, market goes up and then market goes down and then market goes up, market. Okay, so in this case we have an uptrend. Okay, so this is an uptrend. So in this uptrend, right, so if we look from this, the impulse wave is always to be the long side of things. Okay, like for instance, in this case, this is considered the impulse. Okay, and then this down move is considered a reply. And if we notice about this impulse and reply, right, is that the reply wave is always the shorter one than the impulse. The impulse one is always the longer part. And usually after an impulse wave, right, and then price make a reply wave, the next wave that is going to happen is probably going to be another impulse towards the upside. So in this case, we can confirm that it's an uptrend, as price is making the structure. And then as you can see from here, right, you can see candles rejecting all the lows, and then it went up, impulse. So impulse, reply, and then another impulse. Okay, so this is how the market normally works. So later we see on the charts. Then the thing is, right, when you see based on impulse and reply wave, right, we can see that the market will go up and down, up and down. So you do not want to participate. The most important part of this process, right, you need to know which phase is the market in. Is the market doing a reply, or is the market doing an impulse? And the thing is, after an impulse, the reply will usually come. It can be like this and then like this. Okay, so for instance, in this case, right, price make an impulse, okay, and then for instance, price make a reply, but there is no impulse after that, right? As you can see, this is a very short one. Then after that, market makes, in this case, so for here there is still no change of trend yet. Okay, and then when market moving this way, and then people thought that it's going to change trend, and then price make like that. And this is called, when you see in this manner, right, what is this called in the terms of supply and demand, right? It's an impulse, and then this whole thing, right, is actually a base. So the impulse to me is a rally. The impulse is a rally, and then this is called a base, and then price make another impulse, which is also a rally. So in this case, what we do have is that a rally, base rally, as the price continue to go up. All right. So the thing that you got to take note from this, right, is that just remember that after an impulse, a reply will come, and after a reply, an impulse will come, and it goes on so forth, and it goes on repeating those kind of movements from time to time. All right. So the thing is, I want to say that the price does not reverse too fast. So does it matter for which time frame did you see this? Yes, of course. If you look from a higher time frame, Like for me, my time frames, I like to look at this from the monthly and the weekly and the daily, and then from the H4, then I will take my entries. Most important aspect, right, when you do your trading, right, is very important of what is happening in your higher time frames before you even go to your entry. Do not focus too much on your entry. Okay, do not focus too much on your entry. Your entry will take care of itself, but you need to analyze what is your higher time frames doing. Okay, in order for you to understand what the daily is doing, you need to understand what is the weekly doing. In order to understand what the weekly is doing, you need to understand what the monthly is doing. That's it. Alright, that's it. Okay, and according to how you understand the monthly, weekly, and the daily is based on this impulse wave and reply wave. Okay, a liquidity grab. Okay, like a liquidity grab can also be like in this case, like for instance, right, if you look from this base, right, okay, there's a support here, okay, and then market breaks support, right, the market breaks the support, and then people thought that this is going to be a change of structure, but in actual sense, then after that, this is a liquidity grab, and then price make another impulse. You see that? So this is a liquidity grab in this case. So it's important that you understand the trend that the market is doing. Is it doing the uptrend or is it doing downtrend? And then what is the structure overall that you are seeing in the market? Okay, don't jump in too long. Don't jump in too early for market to go down, because if market even want to go down, right, it won't go down straight. It will just play around for a while before moving a big drop down. So don't be one of those who want to try to pick market tops and market bottom. Okay, the most important thing is how you understand your higher time frames. Right, so from impulse wave and reply wave, liquidity grab, and time frame. So from there on, now we are going to move on to the charts. Okay, and maybe we'll come back to here. I'll give you an example about what happened to the charts. So let's see, this is the Euro USD, alright? So Euro USD on the 4 hour. I'm going to go to the monthly chart. Okay, so let's go to the monthly chart and we observe where are the key levels and where is the impulse wave and where is the reply wave. Okay, but before that, I'm going to give you something about impulse wave and reply wave. Okay, if you look from here, for instance, okay, we need an example of why you should not even look at your lower time frame first. You should go to your high time frame before you're going down to your lower time frames. So if this is the 4 hour, okay, let's just assume, alright, let's just assume that you think that, okay, this is an impulse wave down. Okay, this move from here to here is an impulse wave down, which is the movement varies is from here to here, right, from this point up A to point B here, right? Okay, so this is, you should say that this is the impulse wave move down and this is a reply wave and price want to go down. What is this down wave represents in the daily? Is it a reply or impulse wave? Let's look. So now if you look at the daily, right, does this look like an impulse wave down or is it a reply wave down? You make your choice. Alright, to me it's a reply wave down, it's not an impulse wave down. Okay, if you look at this down move that is represented in the 4 hour, which is only one candle, and what does it look like on the weekly? If you look at the weekly, right, which phase are we in? We are still on the impulse wave up. Okay, some people may look at this as an impulse wave down, this is a reply wave up, and then another move down. Okay, but the thing is, right, if you look, why I say that this may be an impulse wave and not a reply wave, because price is rejecting low prices. See, price is still rejecting lower prices from a weekly time frame. And if you look from the even bigger picture from the weekly, right, we can see that this is the impulse, this is the reply, this is the impulse, and this is still regarded as a reply. So we should be going for one more impulse before price making and may move downwards. Okay, so understanding which phase the market is going to help you a lot. Okay, if you look at the monthly for that drop, right, okay, this drop, right, in the monthly, if you look at the monthly, that drop, right, it's actually not significant yet, right? As the last month, we can see that price as overcome. Even for the monthly perspective, right, there is no impulse wave towards the downside. Alright, there's no impulse wave to the downside. It's a impulse, reply, impulse, reply. Okay, there is no impulse wave to the downside. Where is the last impulse wave to the downside? This one. This is the last impulse wave to the downside. And after that, we don't see any impulse. Because why? After the impulse down, and look at here, price maker, sideways, then after that, this is the new impulse up. And why is this new impulse up significant? Because it breaks down this supply. So this move down, right, is a reply wave. So now price trying to go into for a impulse wave. So I remember the order. After impulse, a reply will come. After a reply, impulse will come. We always in that manner. Okay. So I've spoken about impulse wave and reply wave, right? Okay, let's just say now I'm going to go into the liquidity grab. So if you look from here, right, the liquidity grab in the weekly has already happened. Okay, in the liquidity gap, in this case, price will reply wave here, right? And then this is where the liquidity grab happens for 3 weeks. 1, 2, 3. Price does not break this support in this case. Okay, price came back. So you see, if you look at this level is quite significant because the previous broken supply, boom, breakout, came back, make a liquidity grab, false break, and now start to push up. Okay, so from the weekly perspective, right, we knew that this is on the face of the impulse wave, and price, the most significant target is for it to break this top, of course, and then to make into a new high. Okay, so the target, most probably the next near target, I would say about the 1.25 level will be the very nice one there. Okay, but I don't really look at this because I just look at the round numbers. So there's still a number, I mean, quite a way to go. So look at from impulse wave and reply wave. Okay, look from impulse wave, reply wave, and then liquidity gap as you go and look into the markets. Okay, so let's just go through with it. So I knew that this what I will do into my charts, right? So I will say that, okay, where's the nearest target for the monthly? Okay, I will just put here that 1.24196. I think the 1.25 is actually quite a very good level to take. Okay, I will just put as that as mine monthly. Okay, this is my monthly supply. Okay, that's my monthly supply level. Do I need to put a level here? It depends on you guys. If you like to know, then you can make a zone here, but I normally don't like. I just put one level kind of really. Alright, and then what do I see for monthly there in terms of the impulse? Which phase are we in right now? It looks more of an impulse wave towards the upside rather than a impulse wave to the downside. Okay, look at the wave, don't look at the candles. Okay, wave I see impulse reply. So now it's going to be one more impulse toward the top side. And we look from here in the monthly, right? This is the inside bar breakout turned into a fakey, and now most probably is going to look into an inside bar breakout as price is resting on the monthly, on the mother bar here, which is around this level here. Price is resting on the mother bar here, rejecting lower prices. So I see a price rejecting low, and this 1 month candle consists of 4 weeks, right? Okay, so this is going to be my mother bar level in the monthly. So let's see on our weekly what to do. So on my weekly, we can see last week, right, price did rotate down, but this does not mean that you're looking for a sell. So actually, as price rotate down, look at how, and we can still see that price is rejecting low prices. So it's still rejecting market structure in this case for Euro USD. That which is why my bias towards Euro USD for next 1 or 2 weeks perhaps. Still going long towards the 1.25 area. Okay, and I'm not gonna look for any shorts because, as I say, I look at this, we are still in the phase of the impulse. Okay, we are still on the phase of the impulse, so we want to take that impulse wave towards the top side. So in the daily, if you look at the daily right now, we can see that there is quite a significant move based on the Friday close. Okay, and looks to be a bit of a liquidity grab as price retest this previous top here. Okay, so in this case, right, if you look from here in this, to me, what I see as this is that this one could be a rally and then base here, and then price continue to rally towards the top side. Okay, that is what I overlook for Euro USD. You can see that market is respecting the previous broken structure here. Okay, price is respecting the previous broken structure in terms of that. Okay, and using it as a support. Okay, and then there's quite a substantial move up there. So in the 4 hour, we don't. That's why I say when you analyze your daily, weekly, and monthly, your 4 hour will take care of itself. So in this case, once the 4 hour is going down, in this case, right, we can see an inside bar here, inside bar breakout now towards the top side. Okay, so so the thing is, right, if market comes down for a retest or a retrace, right, you want to go long. So in this case, my fail safe is that it's still around this level. As long as price does not break this previous demand, if price reject here and anything from here, we can still go for a long setup for Euro USD. Okay, it's either that or if price broke this previous top here. If price break this previous top here, okay, price break this previous top, came back and then retest and then maybe go for long. That's another way that we can take. Alright, so let's go for Euro. That's all I got for Euro USD. So do your back testing. Okay, for all the pairs that you see, in beginning from the monthly and the weekly and the daily, your focus is more really about the higher time frames. And then what is the higher time frame doing? Do not really go to your 4 hour. Your 4 hour will take care of itself. Remember that. Okay, so for pounds that you see 4 hour here, right, I don't care what 4 hour doing. Let's go to the monthly. Okay. So in the monthly, right, okay, in the situation that you cannot really understand and find where is the impulse and where is the reply, right, then it could be that, I mean, the best thing is to stay out. Okay, one of the ways is to stay out if you feel that you cannot see it. Okay, like for instance, in this case, to me, right, okay, based on me, what I see is that, okay, before this market doing whatever that is just doing right now, what is the previous trend before it? Okay, the previous trend that is doing is an impulse wave towards the downside, right? This can be an impulse wave to the downside. Okay, so after that impulse wave, what is price doing? Price is doing a very, 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 very long reply wave. Okay, to say that it could be an impulse wave up, right? Okay, like for instance, we can still say that we can see from this manner, this as one impulse wave. Okay, one impulse wave up. Because why is this regarded an impulse wave? Because after that impulse, right, price does not go lower to break impulse to go continue this downtrend. Okay, price stop until here, we stop until here, and then go up, we test here, and then it make another impulse towards the upside. Right? Okay, so the impulse, reply, impulse done. So this is the reply, right? The reply wave has happened right now. And then the reply wave has happened. So now, based on what we see, what I see from here, right, we are preparing for an impulse up. So in this case, for pound and ZD, right, I will be still looking for a long setup in the next few weeks. Okay, so we can see a level here. Then from here, you can see that price is rejecting low prices. Reject low, reject low, reject low, reject low, reject low. Okay, so price is still rejecting low prices, and price is still within the mother bar here. So this level is quite a significant level, I would say. Around this mother bar. Okay, I would say around here, this level. So this is a false break of the monthly. So this is the monthly level support, price break up, and then testing, sorry. Okay, so price is retesting here and using it as support on the monthly. So what are we going to? So as I say, we are at the phase. Which phase are we right now? We are still after we have finished the reply wave. Now price is starting to moving sideways, of course, but to me, it's like going to get ready for another impulse up. Okay, so weekly we can see here, right? Okay, we can see here that there is strong bear bullish pressure moving towards the upside. Okay, throughout the end of Thursday or Friday, there was slight push down. Okay, but that does not mean, if you look from here, right, this For now, and even in the weekly, we can see that this is a impulse wave towards the top side. Okay, this is the impulse wave toward the top side, and this drop move is only a reply wave. So now price is we getting ready to move into the top side to one impulse, and the nearest target that we can see from the weekly for me, okay, which is relatively huge. This here. Okay, this will be the first target, of course, and then the next target will be here, of course. Right, so from the weekly perspective, we are on the impulse wave, so we are looking for long setups in terms for pound and ZD. Okay, so pound and ZD, so you don't mistake the candles for impulse wave down. Okay, so to me, and the way I see, even though this candle move down, right, in the daily we should be doing a reply. Okay, so be careful to take any sell because you're going to be short if. That's what I think. Okay, so from the daily we can see that price is going down, but don't take any sells. So for the 4 hour, as I say, I'm not interested in this kind of sell right now, so I'll just be waiting for market to rotate down. The one that I like to do is that I like to take a level from the inside bar. So here you can see an inside bar and inside bar breakout, right? Price normally sometimes will retest the top of the mother bar. So I'll just put my level here. The 1.93200 will be a very good level to start for looking for long setup to go to the 2.02. Okay, and that's it I have for pound and ZD. So the pound pairs and the euro pairs is going to be interesting for next week. Okay, for currently, because I have a CJ, CHFN, I'm long, and gold is still going long to me. Okay, gold is still going long. As I say, I did share with you guys about gold setup. Okay, gold still long to good to go at 1870 before we maybe pull a pullback before going long. So gold is still good to go long in this case. I'm not going to take any short because you can see actually from here in the 4 hour you can see that price is making an inside bar fakie. Okay, this is the inside bar, mother bar, inside bar fakie, price breakouts. Okay, price breakout into the inside bar breakout in the 4 hour. So actually the inside bar starts from here. Okay, but don't look from inside bar only. Okay, as I say, impulse wave, reply, impulse. So in this case we can see an impulse wave. So last week what market do is only a reply wave, so we are looking for one more impulse over the top side in this case for gold. Alright, so that's what I can say for now. Alright, as I say, I don't like to look at too many pairs. My maximum pair may be around 4 to 6 pairs, but I do trade a lot of pairs as the days goes by. Okay, and if there's any question, you can just drop me an email or drop me a message or drop me a comment. But as I say, it's all about practice. Okay, it's all about practice in terms of your impulse wave, reply wave, liquidity grab, and your time frame. The most important part is your time frame. Okay, don't go to anything below the H4 or H1 or M15 even. Okay, what matters is higher time frame, because the higher time frame always wins. Okay, so that's what I got for you all. So I hope you guys can understand and can take a leaf out of this. Okay, cheers. See you in the markets next week.